Okay, welcome everybody to this evening's ACY Securities webinar, live Forex market review. My name is Duncan Cooper. Thanks very much for attending. If you could read through the disclaimer, that would be great. Now, if you have any questions, just type them into our chat or the question and answer box. I've got both open. If you're on our YouTube live stream, I cannot see the chat, so I can't answer your questions, but you're more than welcome to follow the link I've given you so you can come into the webinar. So everybody please read through the disclaimer. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I trade the Forex market full time. Been trading the Forex market now for more than 15 years, been mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. You can connect with me through the week on our website. Go to the market news tab at acy.com. You'll get my analysis there, or head over to our YouTube channel, ACY Securities Australia. And you can connect me in the week if you'd like on my Twitter and LinkedIn accounts there. Or if you haven't, but you can, get access to our Telegram channel where we're putting analysis through there. Just contact Nathan Bray. I'll put his details in the chat in a moment. If you want to get access to my chart layouts and templates for MT4, contact Nathan too. And if you need help with anything really, just contact Nathan. So if you need to set up a demo account, he will help you out. So I'll just put his details in the chat. So any questions about demo account, live account, access to the Telegram, access to my chart layouts and templates, just contact Nathan there. All right. And we do next Wednesday. After this 7 o'clock webinar, we have the Inner Circle webinar at 8 o'clock. Which is usually open to account holders only, but anybody at the 7 o'clock webinar can move along to the 8 o'clock. I'll have the link for the webinar on that day. In the Inner Circle webinar, normally we have clients on the mic talking about their trading. I'll answer any questions that they have, try and help them the best I can with their trading, whatever they want to talk about, whether it's reviewing their strategy, trades they've taken, whatever it is. That's what that's all about. Just contact Nathan if you want to get access to that. In terms of speaking on the mic, if you're in the 7 o'clock webinar though on Wednesday, I will be able to give you a link to follow on to that webinar so you can listen to see what's going on in the webinar. All right. Okay, let's just get into what the news is doing today. Now, the market at the moment is a little bit one way than the other. We don't really have a lot of news coming out at the moment. We do have US news coming out at 10:30 p.m. unemployment claims, but that's not, I would call, a major driving news event, but it can certainly make the market move. But next week we do have just looking to next week, US CPI data coming out on Tuesday, so inflation figures. Markets anticipating a large drop in CPI year on year. Whether or not that's going to come in, we will have to wait and see. We've also got the US PPI figures coming in as well. Not expecting too much change there. Core PPI expecting similar, but we are expecting actually a minus number for the PPI. So, and we've got the federal funds rate. So the market at the moment, it's kind of half a day up, half a day down. It's waiting for the next major news driving factors, which are really coming next week. So be aware of that, because we may just be sloshing around in a 100 pip range on a lot of these pairs at the moment, and that's because there's nothing really driving the market. All right, so just a heads up, we have the US unemployment claims coming out at 10:30 p.m. Queensland time, and Canadian unemployment figures coming out tomorrow evening at 10:30, okay? Those are the major news events coming out. So let's get to the charts. We'll just start with the dollar index, and it's a little bit flat at the moment. Maybe it's forming a lower top here. Maybe we're going to have a week down, although the last 2 trading days have been positive in finishing up. So it is a little bit consolidatory at the moment. From the bigger perspective charts, we are still holding above these tops, or we're at the tops, these monthly tops, trying to hold above them. Weekly is more range bound. We did finish negative last week, and we are down for this week at the moment. But, you know, are we moving back up to top of the range? You know, from the monthly perspective, we had a very positive month last month. Can we put in a similar month this month? Depending on, of course, the news events coming out over the next week or two. So at the moment, the daily here is a little bit up and down, as I was saying. In the day, we're moving up, then we're moving down, backwards and forwards. We're not really following through with any conviction up or down. Have been finishing positive on the last 2 trading days, but it's a little bit quiet at the moment, the dollar index. And the S&P 500 getting very close to the monthly high up here. We have broken above these weekly tops at the moment. This area I've got colored in. And we're just seeing some natural selling pressure as we're getting very close to that monthly top. So if we can't, you know, take that monthly top out, we could be stalling here to move back down the range. So the day chart did show a reversal yesterday, but out of the last 3 candles, we've been reversing very much close to the 4,300 level. So that's getting a little bit capped up there at the 4,300 level. In terms of high tops and bottoms, though, we are still in an uptrend. So I'm not seeing anything to say the big short's on its way. We're still actually in an uptrend here in terms of high tops and bottoms. So if you want to trade to the upside in line with the trend, as I said on Tuesday, look for a 62.79% dip. We're a long way of achieving that at the moment. 62% is at 42.18. So we are in an uptrend, but we are getting very high up to that monthly high point. So it's very high up there to be a buyer. But you know, if you're going to be a buyer, you want to look to buy on a dip. If you want to continue, if you think this is going to continue up long term. All right, so let's have a look first of all now at the euro dollar. Excuse me one moment. Now I've just been watching the euro dollar moving up. Now the key level to watch, let me just get rid of that fib, is this high to the left here, 107.36. We've been starting to hold below that all last week. Every time we come up, last week we rejected. This week, if I drop to the day chart, you'll see the same level. Last 2 trading days. So we're in Thursday, Wednesday, Tuesday, Monday. Thursday, Friday last week, you tried to move above, but we closed back below it on Friday. And the last 2 trading days have been holding there. Fraction short or at 107.36. So that's the level to watch today. What happens up there if we can get there? All right. We've been at 1 pip or 2 short. See how we got short on over here. Just got above yesterday, and we could well be topping out right now to move back down. It's getting rather consolidatory here on the 4-hour. Range bound on the 4-hour, but it is any moves up are getting capped at 107.36. So, and we did have quite a nice, back to the daily here, quite a nice rejection wick. We're just going back up inside that range at the moment. So that's that wick here. And really we're just filling some form of little imbalance. There was a little imbalance in here that hadn't got filled yesterday. And when I have an outside candle, really the imbalance is all the way, is pretty much up to that area there. And we've been very much up to that area. 79% of that drop, 107.28. Looking like we may be topping up here for a move back down. You know, what you set up to sell. Are we moving back down? We're seemingly getting support at 107, getting resistance at or close to 107.36. So this could be the high of the day. You need to work out what would you have as your mechanism to sell. For me, I would be maybe selling at the 79, stop above the high, looking as this as the potential high of the day to move down. Okay. Now, of course, you can't sell at 79 right now because we're not there, but perfect world would be to watch for an actual further test up there, 107.36. That would be a desired level. But if we can't get up there, you can start to monitor to see if we get some more tests of 107.28 to 30. If it keeps holding there, that could be a good selling level to put your stop above yesterday's high. Edwin, you're saying, looking at the 50-minute structure, it's still up as prices normal to break the last higher low, waiting for news for more direction. Yeah, I mean, the 50-minute structure here on the Eurodollar is up, but, you know, looking very much like it's rejecting up here to move down. And as I said, on the 4-hour chart here, let's get rid of, no, it's range bound here. We're at the top of the range. Top of the range is there. That's pretty much where we've just hit. And the bottom of the range is down here. All right, so monitor that top area at the moment, because that could be where we're failing for a move down. All right. As I'm talking, it keeps moving down. Matthew is saying, when scalping, how do you know, or a good way to know, say the trend is bottoming out on the higher time frame, i.e. 1 hour, 4 hour? Well, I'm looking at a chart here where we're at the top of the intraday market, but you're talking about the bottom. So how do we know when it's bottoming out on the 1 hour, the 4 hour? Well, I mean, at the moment on the 4 hour here, it's sideways. So I have to trade, you know, at the moment, I would have to trade this like there's the bottom of the range structure, and there's the top of the range. All right. From a buyer's perspective, though, so I just look at structure. What does the 4 hour structure tell me? That tells me that we're range bound. But if I look at a higher time frame like the day chart, well, you know, if I look at what's been happening over the last month, we've been trending down here. Now we might be forming a higher bottom here, but we can't get above this area of resistance. So I just look at the structure. And in terms of, you know, in terms of scalping at the moment on this, once you get into a scalping mode, if I'm seeing that structure on the 4 hour chart is range bound here, I simply look to sell at the top and buy at the bottom. I just sell at the level. So sell at the bottom, buy at the top. And my range bound method, if I use the outer limits here with the fib tool, I like to sell at the top, stop at the 127R, and buy at the bottom and put my stop at the 127R underneath. And I simply trade the level. All right. So at the moment, that, especially on the 4 hour chart there, that is sideways. And as I just said before, the dollar index is a little bit sideways at the moment, so we're seeing the same sort of thing. Slightly saying this might want to go up for the news. Well, it could do. Or come the news, we could be back down at 107. So I think when the news comes out today, you know, the level to watch if you don't want to engage before the news, and I would certainly err on that caution at the moment. The next big driving factor is that US dollar news. It's simply looking up here at the top. So we have that high here. Right, I'll just get rid of that, rid of these lines. Right. You know, the true area of resistance that's been forming this week has been forming around the 107.36 level. But really, if you just want to color it in, it's that top there up to that top there. Now, what I did notice the other day is Friday's drop after the job figures. So this moved down here, all the way down to there. is where we got capped yesterday was the 62% level. So the move down, all right, getting capped at the 62 level there. So that's a very good reason to think that that could hold. And look to the left. There are more areas of resistance here, here, and here. That's why we're faltering up there. So at the moment, all right, that's the area of resistance up there. When the news comes out, so we've obviously traded into it. I mean, we might not trade back into there. You always have to make a decision. So you can wait for the news. You know, we might get driven up there and it starts to hold and then we move back down. Okay. All right, Euro yen. This is getting rather range bound, but let's just go top down. This high here, we're seemingly below it, fraction above it, back below it. It's rather choppy and range bound at the moment, contending with that monthly top there at 149.77. Weekly perspective, last week we had an outside week to the downside. At the moment, we're kind of trapped on support here to move down. We can't move below support, which is that weekly top at 148.39 and this daily area here at 148.58. So again, range bound, very much like the euro dollar. All right, so we're at the top, getting up to the top. And as we break it down, we've actually put in a lower top this week, but then we couldn't fall below the low to, you know, have a clear downtrend. So we are range bound. So, you know, on the 4-hour chart, the range is from down here to potentially up to that high there, 150.1920, 192, I think it is. All right. So very range bound. Just want to see where the fib is within the range. Right, we're a little bit above the 79 at the moment. I might actually put the range from the lowest point to the highest point like so. So at the moment for this pair, I would be looking, because we're above that monthly high at the moment, I would be looking to the highest point. We're range bound. Can we, you know, when the news comes out, can we come up to here? Now, over the next 24 hours, you can see today and late yesterday, excuse me a moment, I'm losing my voice. We can see yesterday that, and into today, that 150 is holding the market here. So the news might spike us up to the 150.19 level. But once the news comes out today, if we spike up and start to withdraw back below 150, then I would anticipate that we're going to be moving back down the range. And within the range that we're seeing, back to the 4-hour chart, you know, if we come up and fail up here, and then anticipate then that we might be moving back down this way over the next 24 hours, 48 hours, look to try to get in short by the 79% level, which is at 149.84, stop above the high here, so that you can maximize your risk to reward. Now, from a range trade perspective, if you want to trade the top of the range, the way I do it is I sell at the top of the range and I put my stop at the 127R. So that if price wants us to spike through a little bit, it can do that, can't stop you out. It can only stop you out if we kick into a trend. If it's going to remain range bound and test the top of the range and fail, it will not get you stop at the 127R. So you could sell at 150.19, stop at the 127R, targeting support. And that will give you a risk to reward of approximately better than 1 to 3, a little bit short of 1 to 4, okay? All right, so monitor what it does at the top of this range. Look for an opportunity to sell down. Euro pound. Nothing's really changed in my mind. I would just be waiting to see if this can move up to the 62% retracement and the broken level of support here at 86.49 to 86.54. Now, price might not get up there, But I want to just look at logical structure and a great level to watch for reversal down from. It's broken support, becomes resistance, 62% fib. So that's what I'd monitor there. From the downside perspective, if we trade down back down to support and we hold, then you look for a reversal back up on that pair. At the moment, it's in between your levels of support and resistance. It's in the middle. I don't like it in the middle. I want to be trading up from support, trading down from resistance. And I in a perfect world, I want to be trading, if that's a downtrend, holding to a downtrend, I want to be trading down from resistance in line with the trend. So at the moment, it's just in the middle of your support and resistance. So I would wait for that to position itself better. All right, let's have a look at the pound. A bit tricky at the moment, the pound. What I've been focusing on is this. Is this a left shoulder? Is that a head? Are we forming a right shoulder here? Maybe a double top with that right shoulder. And we sold down from there on Friday. We've been closing all week below this double top area here. Of course, we're above it. That's what I said at the start of the webinar. We keep trading up and down during the day. So on the closes of the days, we're closing below. For the last 4 days, we've been closing below that double top area to the right, sorry, to the left here, 124.48. But of course, we keep trading above, moving back below. So a bit tricky. I mean, we are potentially forming a higher bottom here too. So are we forming a double top, right shoulder? Are we forming a higher bottom to move higher? It's a little bit mixed at the moment. It could go either way. All right, now that's the sell-off of Friday. We keep reclaiming some of that movement, and then we keep falling back down below that resistance level. It's not easy going on some of these pairs at the moment to determine which way to trade. We obviously had a nice move down in the month of May. So I'm sticking with the idea that we could move down in the month of June. Of course, I can be wrong, but I'm just favoring that bias and the fact that we keep closing below the 124.48 level. So just monitoring that movement down from Friday's job figures move. You can see we're at the 62 area. We rejected it yesterday, but today, and the thing I want to point out as well, back to the day chart. In this week here, see these two candles, these 3 candles here, where we were below 124.48, and those 3 days we traded above, back below, traded above, back below, closed below, held at that level, traded above, closed back below. 4 days there, we were holding out or trading above, but closing back below. All right. So just because you're above a level doesn't mean to say that we're going to be above the level all day. So we're just, and all these candle highs here are these highs here, where right now we're seeing some selling pressure. All right, that area there. And we've got the 62 level of that move down from Thursday, Friday. All right, so that's why we're pulling back from that level, because of the year highlighted now as well. I just wanted to point those areas out. I know they're there, so I don't really need to color it in. But if you didn't know it was there, you do now. Now from yesterday's rejection, if we're doing the same thing where we're moving above and then moving back down for the rest of the day, now we've just failed at another 62% level here. So this area here could be where we're failing. Now, when the news comes out, I would probably watch up here at the 79 level, 124.83. That's assuming that we can spike up. You can see yesterday we got capped just short of 125. So we're actually stuck between 124 supports, 125 resistance. So the higher up that you could be a seller at, if you're going with the idea that the monthly move last month is going to continue this month, you always want to be looking to be a seller higher up. And I can look at levels and sometimes they get touched and sometimes they don't. And I'm quite happy to miss out if I can't get at a high level, but I'm always looking for the most opportune high level that I can get to maximize my risk reward. And the higher this moves up here, the more price is stretched and the more it will want to pull back down in my in the direction which is my bias at the moment. So I will just be watching higher up the range to see what happens during the day. Can we come up to 124.83 area when the news comes out? News may drive it up to 125, but the higher I can entertain selling, the better, to maximize, the move back down. So at the moment, we could be fighting these 62 levels, but I will just be watching higher up later in the day. Pound yen. Now, Edwin, you were talking to me about the 4-hour head and shoulders. I put this out today on the day chart saying that we could be forming one on the day chart here. Now, this is still holding to an uptrend. It's getting rather range bound, and it's into an area of monthly resistance up here. So, if it's a head and shoulders, for sure, it's obviously a counter trend move back down. So it is, it's still higher bottom, higher top, but we are holding here for sure. And I showed today that on day chart with MACD, we've got some divergence here in this area, and on the 4-hour chart, we've got some divergence here to price action moving up. So it's a little bit divergent up here in this area. All right, so back to my price action charts. If we are forming a right shoulder, there's a 79% level in this area up there, the left shoulder, right shoulder area. All right, 174.24, we're pretty much there right now. The market all day, like yesterday and into today, is just testing this whole area. It's just holding here. Maybe it's waiting for that news to come later in the day. All right. It's got no ability at the moment to move beyond with any conviction. So are we topping out there? So, you could be selling at the 79% level right now. Stop goes above the high up here, or you wait to start to see a breakdown in price action. You want to see some price action proof that we're moving down before you get in. All right. So whatever your strategy is, you either want more confirmation, or you're prepared to sell at the 79 in the idea that this is a right shoulder to the left shoulder and the head, looking to trade down to test supports and move down through the 127 extension. And we could obviously move down deeper. The head and shoulder pattern is often the pattern at the top that starts the reversal. And then we get a continuation of the reversal, maybe over more than a couple of weeks. So are we topping out up there, or are we simply consolidating before we move higher? Trading, really, all it is looking at good setups and setting up with great risk to reward. Trading here at 79% level, targeting the 127 extension, will give you a risk to reward of, I think it's 4.2. All right, so you only have to be right 50-50, and you're going to make a good risk to reward for your trading. And if you hold that trade for the long term, the downside, if it works that way, your risk reward will be better than 1 to 4.2. All right, so trading isn't about being right or wrong, because you're going to be right and wrong when you're trading. It's setting up good risk reward scenarios, high probability trade setups. Okay, I've got no way of knowing if that setup there is going to work or not, but I do know that if it works well, it's going to give me an exceptional risk to reward. All right, so you can monitor that, whatever your strategy is to get in. If you like it, you can wait for that setup trigger to trigger you in. Warren, so stop loss, I would put my stop just above the 100 level. I generally go about 10 pips above. When I'm using a fib of this size, I'd go 10 pips above, staying at the 79% level. And then I wait and see if we can break down to the downside for the long term. But as a target, 127 extension, if you just want a short-term trade, I would target there. Long term, I tend to go to break even and then just see if price can break down the range. Okay. All right, let's head over to the Aussie yen. Getting very range bound at the moment, the Aussie yen. Now, from the bigger perspective to the monthly chart here at the moment, this is in a downtrend, correctively rallying. It's been a fraction short. maybe 10 pips or 20 pips short of the 62 level, 93.70. All right, it's trying to take out these weekly tops to the left. Highest one there is at 93.03, so clearly we're trading above there at the moment. Yesterday we got up to 51, 93.52 almost, okay. We did get some kind of candlestick pattern there, a bit of a large wicked spinning top, high range candle, I think it's called. So, you know, we're getting buying pressure at the bottom of the candle, selling pressure at the top of the candle, almost at break even by the end of the day. We did close above this weekly top at the moment. So this is very high up for me to be a buyer. I would need to see a dip before I could even contemplate buying this at the moment. The day chart trend is showing to be up there, but it's the 2, 3, 4, what is it? 1, 2, 3, 4, 5. We've had 5 days up. You know, do you want to be buying on the 6th day up? I don't, but I mean, if you want to, you can. What I would be looking for at the moment is I'm doing nothing unless I see a very good opportunity shorts. If I start to see a nice rejection candle rejecting this weekly top, first of all, we might spike into the 62 level and then start to reject. So I'm looking for a clear rejection reversal if that can come, or I'm just sitting on my hands at the moment. Now, price might reject up here, but simply just pull back. So we might, you know, get a nice healthy pullback. All right. So that's been the move up. Just want to deselect, you know. From a buyer's perspective, I'd be looking at 62.79 level, pull back, and then look for an opportunity to be a buyer to trade back up. If you think this is moving up long term, don't be buying it at the top of the move. All right, from a downside perspective, if that can come around, I'm just watching, I'm just monitoring the day chart. Do we see a candlestick pattern that starts to maybe say, is there a reversal? For our chart at the moment, it's getting a little choppy, but it's still holding to its uptrend form there. All right. I mean, if you're that fussed about getting long on this pair, we did already today pull back to the weekly top, 93.03 and hold. So that will be the level to watch for a short-term buy at the moment, 93.03 down to 9300. Does that area hold as support? Do you see a setup to buy to trade back up off it? It's already offered that today, so can't go back in time, but that was where your buy opportunity was when it pulled back to that top early in the day. Okay, you can see price action at the moment. Now that it's at such high levels, it's very choppy. All right, so I'm just monitoring that pair. Aussie. Now I was looking at the central pivot and 66.74 to maybe hold. It actually held twice today. There was opportunities to maybe trade at that level to capture something, but ultimately we popped back up. So yesterday we had a nice rejection and we're just trading back up inside the candle. So of the bigger range, the weekly range here, this is corrective against the weekly downtrend at the moment. Popping up on the interest rate decision. Couple of resistance areas here, fractionally above this top here that we false broke yesterday. There's another high just to the left here. Or there's another 2 highs to the left. I might put both in. 67.09. I'll just stick with that one because we didn't. I don't know if we got up to the next one. Next one's at 67.17. Right, we pretty much got there yesterday. Missed it by a fraction of a pip. All right, so we're into a lot of resistance at the moment. You can see the rejection candle. Often when we get a rejection candle, we trade back up inside it in some measure through the next trading day before then moving. And often it can be like a 79% retracement. So I was early in the day wanting to see what it was doing around the central pivot point and the 66.74 level, but we are 6 pips above the area at the moment. All right, so very nasty sell-off. Is this a left shoulder here on the 4-hour? Is this a right shoulder to the right? That's that right shoulder there. All right, 62 level just below it. Now, we can't obviously go back 3 candles to say, okay, sell at 62 level in the right shoulder, but price might come back to that point once more. All right, now that we moved above the central pivot point, my actual preferred level would be up here at the figure in the 60 and the 79% level. All right, as a much preferred level, if it could spike up there when the news comes out later in the day. But levels to watch would be the 62 level. Well, once the news comes out later from the US, 62 level and the 79 level. What does price go to, and then what happens after that? That was a significant sell-off from up there, so we may well put in a lower intraday high at some point today. So watch the 62 level, 6687 and 6700 level. And we may have already topped there. All right, you can monitor those levels, but quite possibly, in fact, I'm giving you the wrong price point. There is a little bit of a left shoulder there, but the 4-hour level's there. Let me just correct that. So I might just put a line on that 4-hour. 6685. It's not too far away from where I was telling you, but that is the 4-hour top just there. So it's that top just there. All right. So we fractionally moved above it, back below it. All right. So are we forming a right shoulder here? All right, let's get into now. I just want to see what the euro dollar is doing. All right, starting to get pinned at the 79% level there. While I've been talking, if you've been watching it, it's come back up to the 79% level. It offered you a sell there if you wanted to take it. Stop above here. All right, let's get into New Zealand yen. All right, level I discussed on Tuesday morning in a video, and then Tuesday evening in the webinar. Watch 64.91 to 85.20. And 79% fib there at the 84.93 level. So on the day charts, the area of consideration for resistance at the moment are these 2 weekly tops, just here, this area. We do have a lower top, lower bottom on the day chart moving back up. Looks like we're putting in the lower top here maybe. And we're being capped at 1, 2, 3, 4 days here. We're being capped at 84.91 weekly resistance high to the left. Just trading into the weekly resistance area and holding there. All right, so for 4 days we're holding. All right, and you can see the day chart range from lower top to bottom to 4-hour. We've been holding at the 79% level, holding at that weekly resistance level. We've once more touched it today. We're what, 8 pips below it at the moment. Are we starting to fail here to move down? That's the day chart move down. Are we failing here to move that way? Of the price action that we've been seeing over the last day, so from here to there, I move to the 15-minute chart just to prove the point. Pip from high, to the lowest point down here. See this? See that over that whole range? All this price action is very choppy, but if you draw a fib from high to low, today we've come up to the 79% level of the day chart range, or just fractionally short, and just fractionally short the 79 level of that range that's been forming over the last, that's one, we're over to the third trading day here. So one trading day, 2 trading days, this is the third trading day. All right, so lots of reasons why price is filling up there at the 84.91 level. 279% fibs, your weekly resistance level. Now, we've actually traded a fraction short of there today, 1 or 2 pips. All right, when the news comes out, it may offer you a stab into that area before failing. That is definitely where the sellers are, right there at the moment. All right, will it offer you the opportunity to trade down from that level today? Or, you know, trade as close to that level. So the market's definitely telling you at the moment, back to the 4-hour chart, we can trade fractionally above that level, but we can't exist above that level at the moment. Okay, so that is where the sellers are. All right, I'm losing my voice a bit at the moment. Okay, on to the New Zealand dollar. All right. So Tuesday I said watch 60.84 up to 61.11. Okay. So Thursday, Wednesday, Tuesday, Monday. Monday, Tuesday, Wednesday. All 3 of those days were traded at 60.84. Got a fraction above the last 2 trading days. And then we rejected yesterday. Now we're just trading back up inside the rejection candle. All right. Bouncing off support down here. So we're back up to the 79% level. We could once more today trade at 60.84. Just a 15-minute chart. So as you can see on a lot of these pairs to the US dollar, they're moving back up to the top of their ranges that have been forming over, you know, the day candle ranges that have been forming over the last 1-2 days. When the news comes out later, if it can, the obvious level to watch is here. 60.84 to 60.79 up to 60.84. All right. Could get up to that intraday top there as well at 60.89. All right. That's where I'll be watching. Hopefully you can see there's a lot of these pairs intraday trading, they're moving up to the 79% areas of yesterday's drop. All right, dollar CAD. Now, from the weekly perspective, this is where we're confined at the moment. Higher bottoms forming, 2 lower tops forming. You know, I don't know if we quite traded down to that low. We've been down to 33.19. That low's at 33.14. So are we at the bottom of the range to trade back up? So I would certainly be watching 33.14, watching 33.01, that area. If the news can spike it down there today. All right. Now, when we came down here last time, I discussed this yesterday in the Trade Set Review webinar. Once we hit support down here last month, we went up and then pulled back to the 79% level before moving this way. So whilst we don't have the exact same structure price action yet in this area, if you're very wise looking at price action, we actually spiked down here and then we traded up on this candle here to that high just there. It's more easy. It's easier to see here on the 1-hour chart. We traded down to that low and then we rallied back up to that high. All right. So price action. So there's your spike down to support. Maybe that's the final spike. So then price comes back up. I don't need to put a fib in here to tell you that we've pulled back to the 79% level because I can just eyeball it. There's a 79% level. Is that putting in the 79% pullback now to move this way north? So when the news comes out later in the day, I would watch for a spike. It's the third day in a row that I haven't yet reset this. I'll do it tomorrow. I would watch for a retest of the 33.14 level down to 33.01. But we might be holding here already to move up from that 79% level, okay? So are we actually starting to, now this is the inverse of all the other pairs to the US dollar that are failing at their 79% levels. It's doing the opposite on the dollar CAD here at the moment. Are we holding here to move up? You know, for the rest of the month, are we down here on weekly support, trade all the way back up to weekly resistance? All right. Now, of course, if you want more information, you know, it was a little bit easier over here last month because it was the 4-hour structure turned to up there to a higher top, pulled back to the 79% level to move up. So you could wait for that structure to form here. I just wanted to show you that I can start to see it maybe forming on the 1-hour chart there as well. So you could be waiting for the opportunity for this to move up above a high and then pull back. The problem with waiting for that, if you want to be less aggressive, is this might now move up and not pull back, where it offered you the pullback here, but sometimes it doesn't. So there's always a balance. So you could wait for this to put a higher top in on the 4-hour, then pull back to the 79% level, and then get ready for an opportunity to buy as it moves back up from the 79 level, okay? All right, let's have a look at dollar franc. Slow going, but what I am noticing, this is a monthly low here, beat the weekly chart, go to the monthly chart, it's this low in here. We're back above that level. Nice reversal last month. But on the weekly chart, there's lots of lows here that we're trying to move above. All right, we're getting above these ones. The more recent ones that we formed, we're back above here. We're back above this monthly low. There's just a couple more that we're still contending with. But slowly but surely, the market is getting above the resistance area. So if we can hold above 90.84, which is the monthly level, it'd be nice if we just had a really nice, because this is getting consolidated, if we had a really nice, strong move up now from this level, move away, and then pull back too. All right, so I'm a bit on the fence on this pair at the moment. I don't like the price action. It's a little bit choppy sideways in the resistance area here that we're trying to move above. So can we get a nice impulsive move up away from 90.84 and then pull back to that level to be support? That would be my perfect scenario there. All right. All right, so look at the dollar yen. Now this 139.38 level is a weekly level of support that I've been using from over here, 139.38. And you can see last 3 days, we've been trying to trade below and getting support off that line. All right. Still, it's a little bit mixed because you've got a higher bottom, lower top. But you know, the weekly trend is clearly up. It is overextended, but in terms of high tops and bottoms, the trend is up. And the day chart here is just a little bit sideways. Very similar looking to the dollar index at the moment. You know, it's waiting for that next news stimulus thing to come out, but it is holding above that weekly level. It's a little bit trapped between weekly supports and this daily top over here. So I'm not seeing anything to do here at the moment. It's just going sideways. You know, you want to be trading something, let's say with a trend when it's showing you this, all right, you know, or it's showing you this kind of movement down. At the moment, it's in stall mode. So You know, some of these pairs at the moment are not that exciting. As I said at the start of the webinar, there are some major news items coming out next week. So the market might stay in this kind of holding pattern until those news items come around the corner. So, you know, you can move to your 4-hour chart and start to draw in the range. Clearly support is down in this region, approximately 139.09, so around about the 139.09 to 139 level. All right, and your resistance is approximately here. All right, which is about the 140.34 level approximately. You know, price may just stay within the boundaries that it's starting to form for, you know, until we get to next Tuesday. Was it Tuesday when the news is coming out, or Wednesday? Just refresh next. Next Tuesday is the big news event, really, from the US. All right, so rather range bound there at the moment. All right, let's just finish off having a look at gold. This is rather choppy, but it's difficult. Sometimes it's trying to get above that weekly top. Sometimes it's moving back below. It's probably spending more time below than above. So that weekly top's here. You know, last week we traded above, but closed below. This week we're trying to trade above, but, you know, nothing really changes. We're closing below it once more. So we'll have 2 weeks closing below that level after having a very negative month last month. Triple top up here. Triple top on the monthly, triple top on the weekly. Starting to maybe want to hold below this weekly top, but your price action on the day chart is terrible. You know, if I want to trade something, I trade something that looks better. And this is just, you know, if it could break into a nice downtrend, that would be great. Now, we did have a very significant down candle yesterday. You know, if you have to trade gold, you'd have to then monitor that drop. And then I would look at the highest point within the fib range at the 79% level. You got this resistance area here too. So that's up at 1963. Yes, it would have to spike above that weekly level of resistance. But with it being so choppy, you have to look at the top of the ranges or the bottom of the ranges to trade. Otherwise, if you're trading in the middle of it, you're just getting chopped around all the time. So if it's range bound, you have to trade the outskirts. I mean, I can see a great area up here, which is last week's high, and then all this area here. You know, if price was to move to that area, that would be resistance here. All right. And support at the moment, if you want to be a buyer for this, is this area here. At the moment, we're just in the middle. And price can go, once it's in the middle, when we're dealing with a range-bound environment, it can go either way. All right. So mark out the extremities of where price has been holding as resistance or support over the last week. I've just done that for you. And trade the outer edges to trade back into the range. All right, any final questions? And Slavia's saying, could be safe to if gold goes up above 1970 or 1980. Well, yeah, 1980 is up in this area here, where I highlighted up there somewhere. Yep. I just think it's very, it's very choppy. I just look at something else. When you look at that and try to work out where the tops and bottoms of the ranges are, it's not that easy. The easiest thing at the moment in terms of working out where price keeps failing is on the euro dollar at 107.36. It's been failing up there for the last 1 or 2 weeks. So, as I've been doing the webinar tonight, as I discussed at the start, 79% level, are we going to hold there? Last 3 candles, as I've been talking, have been touching that level. We can't get up to 107.36 at the moment, and we're failing at the 79% level there. So this pair is quite easy to work out where the top of the range is for the sellers. Gold's not easy at the moment. And pound looks like it's topping at 62 at the moment. Aussie, it's not getting back to the 62. So the news may, you know, spike price back up to the levels that are holding at the moment for a move down today on these pairs. All right, any final questions? Just give you a heads up for the webinars next week. So just be aware, you know, we could well have a range bound environment. So we get back to the end of, you know, Tuesday news into the New York session there when the CPI data comes out. And, you know, don't trade the market like it's in a strong trend if it keeps, you know, swinging from support and resistance. It could be doing that until Tuesday. So trade it like it's a range. All right, so coming up next week, analysis on Tuesday ahead of CPI data. And all right, here we go. I couldn't see it because it was in different color. 14th, going to look at understanding a candlestick chart and identifying candlestick patterns. All right. So if you need a trading or you need a brush up on candlestick patterns, then we'll be talking about candlestick patterns on Wednesday and more analysis on Thursday. Okay, that's what's coming up from me. So just head over to the webinar page if you want to join me and just register your interest. There are some other webinars coming out too, some automated trading webinars. So if you're interested in automated trading, there is some webinars through the month on that as well. If you're brand new, there is a fundamentals Forex masterclass on the 15th. If you're interested in learning all about Forex fundamentals. All right. I think that's a very introductory webinar on that. But if you want an introduction to it, there you go. That actually starts at 6:30 p.m. Sydney time. All right, so that's what's coming up next week from me and the rest of the crew. So with that in mind, thanks very much for your attendance, your involvement. It's always appreciated. And I'll have a great rest of the week. I'm just about over my COVID, so hopefully you're all well and don't have COVID. I'm just about at the end of it. Just trying to lose my voice today though. So with that in mind, hope you're all well. Have a great end of the week. Have a great weekend, and I look forward to seeing you next time.